Hi everyone and welcome to my chart appraisal videos on Tuesday the 22nd of August with me, Richard Perry, market analyst at Hantec Markets. We've got an interesting improvement in market sentiment today, and let me just show you a few charts that reflect that. What we have seen is the dollar rebounding off 93 again on the trade weighted, but that's sort of coming as treasury yields have ticked higher today, and VIX volatility is down, and that's helped to sort of reflect this improvement that we've seen in Wall Street, picking up off the lows. And what we've got basically is the yen weaker, gold weaker, treasury yields higher, and equities higher today. That sort of pretty much all sort of sums up to an improvement in risk sentiment. And you can see here that the dollar is higher across the board. Euro is unwinding a touch after yesterday's gains. Sterling is down, and the yen is also weaker as dollar yen has rallied. Interesting, as I said, gold about 0.5% lower as well. So, and equity markets across the board, all pretty much about 0.5%. So you've got a reasonably positive outlook, and this is all sort of coming ahead of Jackson Hole at the end of the week. And I think that basically the markets are going to consolidate in front of Jackson Hole. There's not a great deal of economic data until we see the Jackson Hole speeches at the end of the week. So I think that markets are going to be sort of putting on hold to a certain extent, just settling down, a bit of consolidation in front of these big speeches by Janet Yellen and Mario Draghi. Yeah, I think that could start to be the theme of the week. So, any economic data today is sort of fairly non-market moving, really. I mean, you've had the UK public sector borrowing negative 0.8 for that, and basically July is always slightly down on borrowing. The government tends to have funds coming in July, so that's not a surprise. And then German economic sentiment from the ZEW 15 is around about where we've seen recent numbers, so that would be a fairly reasonably supportive for the euro, and bond yields probably pushing up on the back of that, if that were to be seen. And then into the afternoon, we've got the Richmond Fed manufacturing, which is expected to be 15. Sorry, that one. Expected to be 15. So not excessively different on any of the economic forecasts that we've seen. And it can't imagine that there's going to be too much sort of volatility around all these data points today. Now, my chart of the day, however, is silver. And what we have seen in both silver and gold is on Friday we saw a shooting star candlestick pattern, where you see a new high within the sort of recent trend phase, but closing towards the low of the day, and that formed a shooting star candle. And that sort of puts a more corrective outlook on silver. Now, you are still in this uptrend channel, and you'd argue the trend is still your friend on it. So that's still a reasonably positive chart look. But you can see these sort of run of arguably negative candles, I'd say, apart from this big strong recovery bull candle that we saw early last week. You've not really seen anything that would suggest that the bulls are really in control of this chart, and you can sort of look at the momentum indicators, and that sort of begins to reflect that, with the MACD lines beginning to sort of plateau off, the RSI sort of meandering back below 60. The stochastics, yes, are positively configured, but hardly inspiring an enormous amount of bullishness. So it sort of looks like the market is beginning to sort of potentially roll over, and it could start to test that uptrend. Now, we've got the support that comes in 1680 from yesterday's low, and 1680 would be today pretty much bang on where that trend line comes in. So that 1680 support is key. Now, you can see here on the hourly chart, 1680 becomes actually a bit of a top pattern. If you sort of break below 1680, you're sort of then moving back towards the 1655 reaction low from the 15th of July. Sorry, 15th of August. And that is a key level near term, and that would be a a big sort of support that needs to hold on for the bulls to even continue this, this sort of run of higher lows. But for now, it looks like this is a consolidation that could turn into a bit of a corrective drift on silver, and that sort of comes, as I said, as I mean, if you watch my gold chart, which I'm going to record in a bit, but it sort of comes as gold is sort of hitting its head up against that big 1300 barrier, and I have a suspicion that I think 1300 could be the limit of the gold rally. So if that were to be the case, then silver's likely to roll over as well. It sort of all plays into this sort of slowing theme that we're seeing in silver. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.